First of all, I'd like to introduce my company. I work for AFI. It's a Spanish consultancy, and we mainly work on financial analysis and consultancy for international organizations. We've been working with the World Bank and IADB and several other organizations. And I'm here today to talk about mobile financial services for the unbanked, which is an issue we've been working on for the last couple of years. The point is, as Alex spoke this morning, well, there's an approach for microfinance using technology as a base to enhance or to empower what they're doing. But there's a different approach coming from banks and from mobile network operators, and that's what I'd like to introduce to you today. So I guess we all know that access to finance is pretty low in developing in emerging regions. Here we've got a GDP per capita versus access to finance in different regions, and we can see there is a high correlation with the GDP. These regions are emerging, saying emerging Asia, Latin America and the Caribbean, emerging Europe, and Africa. And that's where we're going to focus, because on average in Latin America, for instance, 70% of the population do not have access to finance. So why is access to finance important? Why does it matter? Well, there is empirical evidence supporting the idea that it reduces poverty. We've got here that Hanahan said that 10% rise in the ratio of credit to the private sector over GDP reduces poverty 2.5 to 3%. There is also evidence of reducing inequality, and it also rises production. Why? Because you can diversify crops in rural areas, you can buy new machines, you can access to new means of production. And that's on the macro side, but there's also this micro side where people have, with their savings and credit, access to credit, can access insurance, education, medical assistance, and for what we've been talking about these days, entrepreneurship. Many entrepreneurs need those loans to start their businesses. And there's also another side besides savings and credit, which is payments. And in regions like Latin America, a very high percentage of population live on remittances, for instance. And in some countries, remittances account for more than 10 or even 15% of GDP. So efficient payment systems are also essential to families living on those remittances, whether they are international remittances sent from abroad or domestic, which is often forgotten. So we've got this virtuous cycle. There is evidence supporting that technology is in the center of a virtuous cycle between financial system development and socio-economic development. The arrows are in one sense, they could be in both senses, because developing the financial system multiplies the effect on the economy. People can leverage themselves. You can better allocate resources, efficiency. Well, there is all this theory most of you might know. And technology is in the middle. It's been supporting the activities in the financial sector, both in developing and developed countries, since its inception. So our point is, well, let's see what are the technologies that are most useful for these purposes. And well, we can see that there is a great opportunity in mobile technologies. Here we can see that versus GDP per capita, as we had before with access to finance, we've got cellular subscribers in different regions. And here, correlation is not as high as it was before. It's not linear. And we can see that on the left side, you've got the emerging regions as well with the lower penetration of mobile technologies. But the most important part is on the right side. It's rising very, very fast, faster than any other technology, faster than the internet, faster than any other thing you can think of, which allows what is called leapfrogging. It means, well, you don't have to follow all the steps that were followed in developed countries. You don't have to develop fixed infrastructure for communications, then access to internet, then mobile technologies, because maybe in some places it's more cost-effective and it's more useful to have just a mobile phone, and you can do it. You can deploy those networks pretty fast. So leapfrogging mobile technology is what enables these new access to finance possibilities. So here's a pretty complicated graph with the classification we've made of mobile financial services. And well, if you see there's big two blocks saying services over banking stores of value and services over non-banking stores of value, this has regulatory implications that we'll see later on. And it means, is there a bank behind these operations or a regulated financial institution behind it? Or is any other agent, such as a mobile network operator, behind it, offering a different kind of service, which is not exactly banking? And on the other axis, what do we have as a difference between what is called additive models and transformational models. With additive models, what we mean is, of course, there is mobile banking in developed countries, and in developing countries, that is just another channel used by financial institutions to make financial distribution. So you can use the internet, you can go to a bank branch, you can go to an ATM, and you can use your mobile phone. And I bet many of you already have an application for your iPhone or BlackBerry, or just access the web and access your banking accounts, which is not the point for developing countries, or at least for the unbanked or underbanked population. In those cases, it's called transformational. It's clearly user-centric design, trying to find what people's needs are and giving them the technology to do it. And in most cases, as we saw this morning, technology is over in their handsets, because SMS technology has proven to be quite successful to provide those kind of services. And in these transformational models, we see that there's many initiatives on the right side, meaning it's non-banking stores of value, which means that non-banks, or at least non-bank-led models, are often more transformational than bank-led models. On the left side, we only have evidence from South Africa being bank-led models that are truly transformational, are truly addressing population at the bottom of the pyramid. We can see different examples of mobile wallets. There's another one in Brazil, which is Oi Pago. It's not a mobile wallet, but it's credit, so it's already not just transactional payments, managed transfers, but already granting credit to population. And, well, services are mainly, when you've got a store of value, are mainly payments, especially airtime buying, which is one of the best examples of user-centric design, because prepaid accounts for mobile phones in developing countries are majority. In most countries, it's between 80% or 90% are prepaid accounts, and people need to buy airtime. So if you live in a remote area and you have to go somewhere to buy credit for your mobile phone, you're going to lose a lot of time. So if you have the opportunity to buy credit or to buy airtime from your mobile phone, you're saving time and it's more efficient. So that's one of the killer applications for those. And of course, money transfers and cash in and cash out, which is essential and many people don't think about, because we still live in a cash-based economy, and people need to get real money and need the ability to cash in their money to reload their account. So those are the first services offered in these initiatives. So as I said before, we've got regulatory issues, and I'm not going to bore you with all these, but just to point out, there's a great deal of financial regulation that's involved. In Latin America particularly, it's rather complicated, because you've got on one side the central banks regulating payments. On the other side, you've got banking regulators, which are superintendencias, or however they're called in every country. And there's also an issue with consumer protection and e-money issuance, which is something that has not been addressed in most Latin American countries, and for that reason in many countries, in most countries in the world. We've got a regulation in the European Union, and it's being revised right now, but it's a pretty complicated affair. And then you've got taxation. I think yesterday we were talking about how taxing different services for the unbanked or for base of the pyramid can be essential. Financial literacy, because people in many cases understand the technology and know how to read, but they're not sure what they're doing, what kind of operations they're doing, and how their money is moving. And of course, to develop a business case that is sustainable. So here, what I said before, in this case, there is a role for the bank, there is a role for the operator, and depending on the strategy and the business case that's been done, one is bigger than the other one. And this is going to determine how the model is considered bank-based or non-bank-based, and if the value is stored in a banking account or in any other store of value. And of course, over this, which is the base of the system, there's a role for NGOs or for microfinance institutions or for entrepreneurs that can build on this and offer additional services at some point. So just to finish, because I think I'm a bit short of time, just a couple of examples of case studies I'd like to point out. The first one is M-Pesa, which is one of the most popular, renowned experiences in mobile financial services in the world. And it's a case in Kenya. It was launched by Safaricom, which is a joint venture. It was a joint venture of Vodafone and the Kenyan government. And it started with a pilot to send remittances from the UK to Kenya over the mobile phone. And finally, they discovered it was too complicated. There were great concerns with anti-money laundering regulation in the UK. But they discovered that users liked it, and they found it pretty useful to send remittances from the city to the countryside, or to buy their airtime. So finally, it launched as a commercial service, and right now, after less than 2 years in operation, they've got more than 6 million accounts. That means that it's 1.5 times the number of bank accounts in the country, which is like 4 million. Okay, which gives you an idea of success. And it's been not only scaled in the country, but exported to Tanzania, Afghanistan. And similar models by other operators like Orange are being developed in other countries. And here you've got another example, which is from Latin America, the region I've been studying. And we've got not only a bank and a mobile network operator, but an NGO. And in this case, the operator is Telefónica Movistar. The bank is Banco de Bogotá, and then there's the Coffee Growers Federation in Colombia. I bet many of you know Juan Valdez and the coffee growers, and when you get a coffee, it's the Café de Colombia. Well, that's the Federation of Coffee Growers. Between 70 and 80% of the Colombian coffee is commercialized by this federation, and they've got like 500,000 coffee growers, and they're pretty innovative. They've been working on intelligent identity cards for their associates, and they can vote with it. They can store money in those accounts, which is sort of e-money. And right now, they're piloting using the mobile phone to operate with those accounts. It's 300,000 coffee growers are going to be reached by this pilot at a later stage. And what they can do is, of course, transfer money. There's cash in, cash out, what I said before. They can get additional value-added services such as real-time coffee prices in markets, so they know how much money they're going to get when they send their grain to the Federation. And it's pretty important to see that one of the main factors for success in this case is the trust, and not only the convenience, but the trust on the Federation, because there is a long-term relationship of the coffee growers with the Federation. They sell their coffee for them. They have economic transactions. They have to vote their leaders because it's that kind of organization. So once you have that, technology is a great platform to enhance what they're already doing as a community. And just to point out what the room for innovation is in our opinion, well, there's, of course, a wider range of financial services that can be offered and operated through mobile phones. Not only payments, not only money transfers, but, of course, insurance. It's particularly interesting, the use of mobile phones for payrolls, particularly for government payrolls to professors and to doctors or whatever. Of course, social benefits. Some countries in Latin America are already working on that because countries like Ecuador have 1.5 million beneficiaries of social benefits, and it's a great opportunity. Of course, tax payments, which is a payment in the other sense, but that's less interesting for the people. And there's also room for conditional remittances. That's something that's been very commented, which is, well, once you send your money, sometimes that money is not spent as you think it should. And the mobile phone and technology, once the money is electronic, you can control how this is used. If you want it to be used for buying food or paying your rent or whatever, instead of buying new Snickers or whatever, okay? And of course, there is room for integration with microfinance institutions, because what Alex said this morning with the Grameen Foundation is a movement from the other side. And there are microfinance institutions, big ones like Prodem in Bolivia, that are working on this, and they try to use mobile phones to know how when a loan repayment is due and so on. Of course, improved dissemination of these technologies, not only abroad but in the same country, get people to know how the mobile financial services work and what their capabilities are. And cost-effective cellular coverage in remote areas may seem obvious, but when you see a continent like Latin America with the population density that is very low in some regions, it's pretty hard to reach those people. So there are different ways operators are pushing in one sense, because they are paying a pretty high percentage, like 3-4% of their profits for telecommunications funds in countries which are being invested in bonds and low-risk assets. And they are proposing the governments to use that money to invest in extending telecommunications networks. And finally, better user experience in the whole, not just technology, because people tend to think that technology is an issue, but technology has proven quite successful. People who know how to use mobile phones, and it's just to improve the general user experience, which involves consumer protection, involves identifying clearly what the financial institution is, and it's also using the service. So I think I'm in time, and thank you very much.
Thank you.